Welcome to Investors Insights, episode number 135. We're thrilled to be with you today. It's just Bobby and myself. Greg and Trey are in client meetings, but wanted to wish you a happy market week. And if you need either one of them, feel free to call them directly here at the office or email them. Today we'll be discussing a lot of economic data from last week and this week. Bobby's going to take that. With the G20 meeting in Turkey beginning yesterday, I'm going to take that in a little bit more depth. But before we start, we just want to say that we are really thinking about the people of France and what they went through. A free market economy and a democracy will always win over that. It will again. And we just want to let them know that we're with them. And it sounds like over the weekend, the French authorities have made a lot of progress in the investigation, which is great. So we'll be thinking about them very much this week. I encourage you to connect with us on Facebook, Twitter, and LinkedIn. Links on our blog. So let's jump right in with that.
I'm Greg Powell, and this is Investors Insights.
You're listening to Investors Insights with President and CEO Greg Powell and the Portfolio Strategy Team at Five Plan Partners.
3, 2. Yeah, so last week ended in the red. Obviously, all eyes continue to be on the Fed. Also, retail sales came out last week and disappointed. They came in lower than expected. We've been saying this, almost every week. We need the consumers to get off the sidelines. We're looking very strongly at the consumers for consumer spending to drive this market the next few months. Also, it came out over the weekend that Japan is technically now in a recession. Two back-to-back quarters of negative GDP. So that's a concern. Obviously, it's a global market. A global economy.
And a large one.
Yeah, exactly.
Yeah.
And so this week, it's a busy week. All eyes continue to be on the Fed. Today, manufacturing index comes out. Tomorrow, inflation. Inflation is a big part of what the Fed is looking at before raising rates. And then on Wednesday, the Federal Reserve minutes come out. And then also, there's a lot of speakers this week from the Fed. And so this week is going to be all about the Fed and what the Fed members are saying.
Yeah, it'd be interesting. Bobby's right. We really need those consumers to be spending because, as Bobby knows well, that's 70% of what drives the market. We really do need them spending again, as we've talked about in the vlog many times. Since you'll see this in the popular press a good bit this week, we thought we would cover a little bit with you the G20 Summit that, of course, started yesterday in Turkey. And to understand the week going forward, Bobby and I thought we'd give you a little bit of a history of how they've kind of managed through the financial crisis. It's interesting, really. When we got into the financial crisis, really at the back of 2008 into 2009, the first response by the G20, which of course is the largest 20 economies in the world, the response by the G20 was to come together really with monetary policy and coordinate central bank repurchases, quantitative easing, like we called it here. That first wave of what they did, and that was in the meeting of 2009, I think we would agree that was effective. The monetary policy hit the worldwide economy pretty well, pretty rapidly. And so within a year from 2009 to 2010, you went from a global recession to a modest growth. So the first round of their impact, I think we'd argue, was a good one. After that, of course, we still had growth, but the IMF each year was sort of ratcheting that down. So in response to that, 2 years ago in 2013, the G20 got together and went more of a macro or fiscal direction in addition to the monetary policy. And so we're going to try to spend about $2 trillion with a T in infrastructure to sort of add on to the good result we'd had in monetary policy, and that is to sort of keep the economy moving. That one, as Bobby knows, has not been quite as effective because there's been a lot of political component of that. Some of that money has gotten into the world economy. The problem that you'll see this week with the G20 leaders is they're somewhat running out of ammunition for that. The 2010 monetary policy push was effective. The 2013 fiscal push, really not as much because you couldn't get in and solve a lot of the political problems. However, what you're seeing now is a lot of those countries that did the monetary policy, that jumped in trying to help with infrastructure, their debt loads on their balance sheet are much greater now. So their willingness going forward to do a lot more is going to be limited. And that's really in sort of a couple of key areas. The emerging markets after 2009 is what really let us out of the 2009 problem. And they did a lot of infrastructure spending. Most of those economies overall, if you look at it, they had budget surpluses before they went into the financial crisis. Bobby and I were looking at some data this morning. Now they all have deficits to the tune of about 4% of their GDP, which is certainly not the level of the United States, but it's big for them. Yeah. So what Bobby and I wanted to let you know is as you're watching the G20 this week, we're kind of running out of our ability with this extra leverage to do nearly as much. Finally, we have some one-off items like Bobby mentioned this morning, the European refugee crisis has strained budgets in Europe. And that's another reason that they can't take on more debt. So when you're watching the G20 this week, it's going to be interesting to come out of it with the monetary policy really kind of having been done and a lot of the infrastructure spending 2 years ago having been done to the extent they could. Really, what's next to sort of help the economy?
Yeah, and obviously with the attacks in Paris, that is going to take precedent the first couple of days.
Oh, sure.
Obviously,
sure.
Understandably.
Absolutely.
But if you look at Japan, Japan is now in a recession. Their stimulus isn't working. And there's a lot to go over in terms of economically. For all these countries, Russia is in a big downturn because of commodities and oil, the lower oil prices.
It is. Yeah.
So there's a lot to look at, a lot they need to figure out.
It is. And to Bobby's point, makes even more important this consumer getting off the sideline because the narrower and narrower the G20 has with bullets in the gun, so to speak, the more and more they're going to need the U.S. consumer to lead us out of this. Exactly. So we're watching this carefully. We've enjoyed being with you. Feel free to give us any call that you need to. We're here. Enjoy answering your questions that we get on the vlog, and we hope you have a great week. Thanks.
More information at fiplanpartners.com. Securities offered through LPL Financial, member FINRA, SIPC.